Welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. We're going to be mixing technicals with fundamentals today. In front of your screens right now, you have your USD's daily chart. It's all mixed up, and we are going to be sorting it out. No worries. Okay, let's start with recalibrating practically the pair's resistance support lines before we discuss anything about direction. Definitely, we have the first resistance line. Seems to be correct. It was a prior peak. I would be changing a bit the prior second resistance line, which seems to be more of a former support line now turned to resistance, given that the price action has moved decisively lower. The third resistance line has to be moved upwards, and I'm going to be taking it on this peak here. Could go a bit higher. At 1.09. Okay. Could go a little bit thinner. Let's leave it. Adding a label. 1.09 and second resistance line at 1.0815 and first resistance line at 1.04. That could go a little bit higher. 50. Let's see the support lines. Adjusting the S2 at 1.06, and let's have a look for the S3. Let's go hunting. I'm placing it on this row here, with the next one being here. Okay. 105.20 and 105.0445. Readjusting the chart, and let's place everything in order, starting with the resistance lines and the labels, locking them in. The S1 at 1.067, the S2 at 1.06. Actually, the corridors between the resistance support lines could widen a bit. And 0520. Now the big question is whether the bearish movement has been continuing. Let's have a look. Seems so. On the other hand, though, we see that there is relative stabilization of the price action given its relative inability to actually form lower lows. And I'm going to be highlighting here, allow me to insert a couple of shapes. Let's add an eclipse. You can see one throw, and then immediately you can see a second throw right at the same point. So practically we have a double throw here. And that tends to highlight, I wouldn't say it's a W formation, but it definitely shows a difficulty on behalf of the pair to form lower throws and break the S1 1.0670. That's something which may force the pair's price action to stabilize, and should that be the case, we may see the price action actually breaking the prementioned downward trend line and remaining within the scope set or the corridor set between the R1 and the S1. That would force us to switch our bearish outlook in favor of a sideways motion bias. On the flip side, should the bulls take over, we may see the price action breaking the prementioned downward trend line, but also breaking the R1 1.0750. It's anyway very close by, and start aiming for the R2 1.0815. Let's have a look at GBP/USD. Drilling to the daily chart. Zooming in. Okay. Let's place some resistance support lines. Definitely this low point is a support level. And I would be highlighting this as a resistance line. I would be highlighting also this level here. You can see how it touched, it briefly broke it, but overall that seems to be holding. And that would be another peak to the downside now. And here. Why? Because we have continuous touches here and this one. 1, 2. Seems quite interesting. Let's place some labels. Starting with the 1.2890, which is now the R3. The R2 at 1.2810. The R1 at 1.2740. the S1 at 1.2625. Sorry about that. The S2 at 1.2530. And lastly, the S3 at 2445. There's a clear downward direction. I think that's more than obvious despite the correction higher. Let's draw that. So we tend to maintain a bias for the downward motion to continue for the time being, but, and now we're going to be issuing a warning here, it seems that the direction is about to change. And I'm highlighting this practically because of the pair bouncing on the 1.2625 support line. And I would also be noting that we have the RSI indicator which has risen and reached the reading of 50, implying more or less a rather indecisive market, which could actually provide some support for cable. Let me readjust the levels once again. So brace yourself, we may be seeing the price action breaking the pre-mentioned downward trend line, and should it remain within the corridor set between the R1 and the S1, then we would be talking about a sideways motion. Should the pair actually be able to breach the R1 and also reach at least the R2 1.2810, then we may be talking about an upward trend line. Let's also have a look at USD/JPY daily chart. Zooming in, readjusting the chart. Weekly. We have an upward channel which practically is supporting the price action's upward movement, or directing it at least. No ray. Let's thicken it a little bit. And actually this could be extended back to the daily chart. Sorry, back to the weekly chart and pulling it back a bit. Daily. There's an upward trend line within the upward channel. Zooming out. That's better. Now, we have definitely a resistance line right here. That's a 34-year high. Should be colored in red. And it's the 1.26 20, locking it in. Support line, you can see how that was a former resistance, has provided support as well. Seems to be pretty solid. And that's at 151.85. In green. Zooming in. Okay. Let's place some more support and resistance lines. Another one could be placed here. And I would be placing the third right here. On the top, I would be placing resistance levels at 161.5. Daily chart. Let's narrow the support lines. Could go wider. There was a former resistance line here which has been broken. And that would be 157.70. $154.60 and 151.85. Placing the second resistance line at 163 based on volatility. However, let's wait and check this before we actually move on. And the $166. Okay, seems good. Let's place some labels. There are 3 being set at 166. That should be in red. The R2 at 163. And the R1 at 160.20. Moving now to the S1. 157.70. Second support line at 154.60. And the third support line at 151.85. Now everything's locked in. The upward direction is clear. I would be highlighting though that there may be some difficulty for the pair to actually breach above the 160.20. That was a level at which BOJ had intervened in the past. We can see it right here. That was intervention where the pair dropped, corrected higher, once again dropped, and reached all the way down to the 151.85. So that would be something to watch out for. Yet the RSI indicator, despite correcting a little bit lower than the reading of 70, seems to be pretty high and tends to support the notion of a residue of a bullish sentiment in the market for the pair. Now at this point, allow me to go to the history center, major effects. I'm going to be extending the data available in the MT4 because practically what we're talking here about is the R1 at 160.20 is a 34-year high. Now, on a fundamental level, the situation is quite worrying in the sense that we had BOJ's ultra-loose monetary policy actually weighing on the Japanese yen. And I would be closely watching the release of Tokyo CPI rates on Friday. And should they show that Tokyo inflation has eased further, that would make the narrative of persistent inflationary pressures within the Japanese economy, which is the narrative of BOJ, being a little bit, I wouldn't say obsolete, but weaken it. And that may make the way towards another rate hike, a 10 basis points rate hike even, of BOJ a little bit harder. Mind you that the bank expects the bank to deliver 10 basis points rate hike in its next meeting. In my opinion, that's a little bit uncertain. And I'm highlighting this because I'm not quite convinced that we have inflationary pressures which are persistent in the Japanese economy and sustainable. On the other hand, though, I understand the willingness on behalf of BOJ to actually deliver another rate hike, possibly two. However, that remains to be seen. It's a big issue, and in my opinion, that's as big as practically is the possibility of a market intervention by the Japanese state. Whether that's the government or in cooperation, which usually is the case, with BOJ. Let's have a look how far back we can go here. Okay, we're going back beyond 2000. We're at 96, 95. '93, 94. So we're going back to 1990. And you can see the peak here. Let me have it with a thread. It's impressive. We are in the monthly chart and we cannot see the end of it. It was in March 1990 practically, April. Okay, readjusting the chart. Daily. Okay, let's have a look at gold's price as well. Daily chart. By the way, be advised, we will be issuing a gold report later today. So all of you gold traders which are interested on the fundamentals and what's happening, etc., it would be a nice read. Let's zoom in a little bit. So there seems to be a sideways motion here. It could go up here, but I would prefer to give it some breathing space. Definitely that should be in green. Next support line to be placed here. That's a former resistance line at 220. And the third support line here at 2145. Unlocking the chart, I think that the 2450 is practically an all-time high. And yes, that it is. 2,385 being the second resistance line. I'm placing the R3 at 2,530. Let's place some labels, starting with the R3, 2,530 in red. For the time being though, we tend to maintain a bias for the sideways motion of gold's price to continue, possibly between the R1 2,385, which I'm going to be labeling right now. Placing now the S1 on 2,280. The S2 2,220. And the S3 2,145. Okay, that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hi everyone, welcome to today's webinar. For today's session, we're talking about custom indicators and EAs on your MT4 and MT5. So let's just go ahead and get started. As per usual, we're starting off with our risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer, this information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll look at what are custom indicators on MT4 and 5, what are some EAs that you can use, various types, and where to find them, how do you use them, and how do you backtest them. Okay, so if you guys have any questions throughout the webinar, feel free to just pop them into the chat, and I'll be happy to answer them. Okay, so what are custom indicators on your MT4 and 5? So they're basically independently developed in MQL4 by a user, functions as a technical indicator, and are basically graphical displays of custom calculated formulas. So here's an example of a custom automated daily and weekly pivots indicator. You can see here the daily line is the purple line, weekly is the blue line, and then our monthly pivot is the gray line. Another example of a pivot points indicator, you can see here, it basically works like your normal pivot points indicator where it has your pivot point, your S1, S2, and R1, which are basically your support and resistance levels. So those are pretty simple indicators. Here is an example of a more complex custom indicator. So this is on MT4 and it's for the pair pound dollar on the H1 chart. So we can see that for this particular indicator, it uses the moving average cross over the trend following strategy. So this custom indicator has multiple confluences such as moving average, ADX trend, and trend signaling on the higher time frames. So this shows us that custom indicators can be pretty flexible in terms of confluences, and users can be creative with it if they decide to create their own indicators. Okay, so what are some expert advisors or EAs? They are basically developed in MQL4 as well as 5, and it's a software that automates trading functions based on algorithm. So it basically notifies traders of trading opportunities and suggests trades that can be profitable. Different types of EAs. We have the scalping EA, news trading EA, breakouts EA, and hedging EA. So it really depends on your trading strategy and what exactly you are looking for. Here's an example of an automatic trading EA. You can see at the corner here. It tells you the spread and it tells you a suggested lot size, what margin you should use, leverage, take profit, where you should place your take profit, stop loss, so on and so forth. Similarly, here's another automatic trading EA, but it tells you the same thing. Okay, and another one, yeah, pretty much tells you the same thing, the account's profit or loss, account equity, drawdown percentage, spread, lot size. So where do you find these EAs and custom indicators? You can find them on your MetaTrader market page. Some tips is to purchase from sellers with excellent reviews and to be careful of any advertisements and to test these on demo accounts so that they don't affect your capital. Next is Fiverr. So it would be helpful to engage a coder if you have a specific strategy for your custom EA. This also allows you to white label your service after licensing your custom EA. Okay, Forex Factory website. So we have mentioned Forex Factory in the past, but more so for the economic calendar. But they also provide you with some recommendations for best expert advisors that are free. Or, of course, you can simply Google it as well. So how exactly do you use them? So you double click the EA that you would like to use on the Navigator tab on your MT405. Enable the following options and then click OK. So you allow live trading, allow modification, and DLL imports. And yeah, there you have it. So now let's look at how you can backtest these indicators. So just an overview of backtesting, it basically uses historical data to test your strategy and allows you to understand the behavior of your strategy so that you can fix it and improve it. So what exactly it is, backtesting in trading is basically simulating the process of trading while using a set of rules over previous price data to see how much money would have been made or lost if a trader had followed the same strategy. So it's basically a retroactive test where a trader enters a set of values or rules like a currency pair, time frame, and technical indicators. Then the automatic backtesting trading system can analyze the tick data and show you what would have happened if you had taken the chosen strategy. Some things to watch out for would be your net profit or loss, volatility measures, averages, and ratios, and analyzed return. Okay, so what is tick by tick backtesting? It's basically it uses in-depth data and volume weighted into price. It involves creation of elaborate models and it prevents unexpected surprises and it also simulates your trade execution. So this is an example of what your backtest report looks like, and there are 4 key areas that you would need to look at when you produce your backtest report in MT4. So that would be those highlighted here, your total net profit, maximum drawdown, total trades, and profit trades. Okay, so what exactly they mean? Firstly, total net profit is the overall financial outcome of trades generated by a trading system if it had been used in the past. So it indicates the potential profitability of a strategy, although it doesn't guarantee future performance. This parameter provides an estimate of the potential gains from using the system. Secondly was maximal drawdown, and this refers to the largest loss experienced by the trading account in both monetary value and percentage relative to the account balance. So a lower drawdown is generally preferred, but it depends on the trader's risk tolerance and account size. So for example, if a trader has $10,000 with a risk tolerance of 20%, the maximum drawdown should not exceed $2,000. Number 3 is total trades, and this represents the overall number of trade decisions taken by the trading system. So it helps to assess whether the strategy is aggressive or moderate by comparing the number of trades to the investing time frame. So for instance, if there are 200 trades in 3 months, it indicates an average of 3 trades per day, making it suitable for intraday trading. A smaller number of trades may be better suited for mid-term trading. And lastly, the key point that we will look out for is profit trades. And this indicates the number and percentage of profitable trade positions out of the total trades. It reflects the trading system's win ratio with a higher percentage, indicating a more successful system. Okay, so some common backtesting mistakes would be having unrealistic backtest results, do not overmine your data, getting the timing right, and incorrect assumptions. So how exactly do you backtest them? Okay, so you basically want to open your MT4 and click on the strategy tester button over here. But this feature is not available in the mobile version of MT4. Okay, and then this is what it'll look like. Click on Expert Advisor, input the EA that you're looking at. Okay, and then once it fully loads, you can click on Start. Yeah, so basically these are the steps. Select your EA, set your dates, and press Start. Okay, and then this is the Graph tab, what it basically shows you. And if you want to look at your results, that's just basically the Results tab. So it'll tell you the number of orders that you've put in, the lot sizes, and the profits or losses that you've made. Okay, and lastly would be your report tab. Yeah, so you can see it's basically a summary of your trades. So your profits, your losses, yeah, number of long positions won, short positions won, so on and so forth. Okay, so how do you decide whether to use MT4 or MT5? Let's do a really quick, brief intro to both of these platforms and compare them so that you can see which is more suitable for you. Okay, starting off with our intro to MT4, when you go in, this is what the interface looks like if you've never used it before. So it was launched in 2005, and MT4 has become the industry standard for Forex trading. Um, it's renowned for its user-friendly interface, robust functionality, and extensive range of features tailored to both novice and experienced traders. So its key features include ease of use. So its intuitive interface makes it accessible for traders of all skill levels. Platform's design, you can see, is pretty simplified. So it's easier to manage your trades and conduct your technical analysis. Charting tools. So the platform offers advanced charting capabilities with various timeframes and a wide range of technical indicators. So you can see all of the tools that you need are right at the top here, or you can click on tools as well. Yeah. So you can customize your charts and indicators to fit your own trading strategy. Automated trading. So this MT4 also offers the ability to support EAs that we went through earlier, reducing the need for constant manual intervention. Security, MT4 is quite secure since it has data encryption to ensure the safety of trades and user information. And lastly, community and support. So MT4 has quite a large active community of users who share their strategies, their tools, insights. So it is a pretty collaborative trading environment. Now if we look at MT5, so MT5 was released a couple years after MT4 in 2010, and it was designed to offer enhanced trading capabilities and broader market access. So while maintaining many of the features that made MT4 popular, MT5 introduced several improvements and new functionalities, such as its multi-asset trading. So the main difference between MT4 and MT5 is that MT5 supports not only Forex trading, but also stocks, commodities, and futures, and even crypto as well. So it makes it a multi-asset platform suitable for a wider range of financial instruments. Enhanced charting and analysis. So MT5 includes more timeframes and built-in technical indicators than MT4, along with additional tools for comprehensive market analysis. So we'll go through what some of these differences are in a bit. Next is another difference is the economic calendar. So you can see below it offers you this tab, this calendar tab, and it features an integrated economic calendar, providing traders with real-time news and data that can impact market movements. Hi, yeah. Has this webinar been? So this webinar is being recorded. If you would like the recording or you would like to rewatch this webinar, feel free to email IronFX, the team. I think it's on the website. Yep. If you just search up ironfx.com, it should be on the website. Just email them and they can help you out. Okay. Another difference is the improved order management, which is more sophisticated order types and execution options. It also boasts faster performance and deeper market depth information. So that basically includes, it basically provides you greater insight into the liquidity and order flow of a given instrument. Okay. So MT4 and 5, some key differences. So here's a table, a summary of all the differences between MT4 and 5, but basically it depends on your needs and preferences. MT4 remains a favorite for Forex traders who appreciate its simplicity and the extensive library of available EAs and custom indicators. And on the other hand, MT5 is better suited for traders looking for a more versatile platform that supports multiple asset classes and advanced trading features. Both platforms are available on various devices, including your desktops, mobile, and tablets. So you can access the markets from anywhere, anytime. Okay. So some key differences in the tradable instruments we mentioned earlier. MT4 only allows for Forex. MT5 offers commodities like your metals, energies, stocks, as well as indices, and some crypto as well. Time frames. So MT4 only offers 9 time frames, which would be your basic M1, M5, M15, M30. Hourly time frames include your H1, H4, daily, weekly, and monthly, which is enough for swing and long-term traders. But if you prefer to get a deeper analysis, you can look at MT5, which provides 21 time frames with way more minute time frames and hourly time frames, as well as the daily, weekly, and monthly time frames. Okay, MT4 has 31 graphical objects such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. So if you think that's enough for you, MT4 might be a better option. On the other hand, MT5 offers 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools, and more. Okay. Next is trading orders. So MT4 offers 4 types of orders: the buy, stop, buy limit, sell, stop, and sell limit. Whereas MT5 offers 6 types of pending offers. So pending orders rather. So there are those that are offered by MT4 and 2 more: the buy stop limit and sell stop limit. Okay. And of course, we mentioned earlier the economic calendar. So there is no built-in economic calendar in MT4, whereas MT5 offers an integrated economic calendar with useful and real-time info about macro events. But if you are more inclined to use MT4, there are a bunch of free economic calendars online as well, so it's not too much of a worry. So if you take a look at my screen now, this is just an example of the uh, economic calendar that we prefer to use. This is forexfactory.com, and it has a bunch of indicators. But if you click on a date, you can look at we prefer to look at the weekly forecast. So the events for the upcoming week. But if you prefer, you can look at the entire month as well. Okay, so by clicking on this filter here, I normally like to look at the medium and high impact events that are indicated by this orange and red icon. Yellow is low impact, gray is bank holidays. So you can also look at the different currencies. You can narrow it down to just the currencies that you're trading and the different event types as well. So yeah, then we have all of the events for the upcoming week at one glance and the currencies that they will be impacting, the forecasted values, previous values, and it also tells you the actual data once it's released. There are a bunch of forums you can take a look at as well. Yep, some news as well from the different news outlets over here. So yeah, that's so MT4 not having a built-in economic calendar isn't that big of an issue since there are a lot of economic calendars out there that are free to use. So the one that I went through earlier is forexfactory.com, but there's also investing.com or Baby Pips also has a bunch. Okay. So MT4 versus MT5, which is a better pick? So some pros and cons of MT4. Pros, MT4 is perfect for beginner traders because it's easier and simpler to use than MT5. And MT4 is the best platform to trade Forex as it was initially designed for the needs of Forex traders. Some cons is that it has fewer trading options than MT5 and it's a little bit slower than MT5. MT5 allows trading Forex as well as stocks, indices, commodities, and crypto, has more charting tools, technical indicators, and timeframes than MT4. Some cons is that the MT5 can appear to be more complex platform for beginners, and there are fewer robot and expert advisor developers who opt for MT5. Okay. So some tips for MT4 and MT5. Firstly would be to use the MetaTrader Market Scanner. Second, create custom indicators, use EAs. So we already went through at the start how to create your own custom indicators and use EAs. Fourth would be to manage your risk, and we'll go through some tips on how to do that. Stay disciplined and have realistic expectations. So let's talk a bit about how to manage your risk now. So here we have the most basic trade management tips. So here by confluence, we are talking about Fibonacci confluence, which basically occurs when two or more Fibonacci levels line up in the same area. But this also applies for resistance areas or any pivot point levels. So for your stop loss, we typically recommend you to place it beyond a key level. And the reason for this is because more often than not, price is attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before the market reverses. This is one of the reasons why most people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. Okay, and as for your take profit, we recommend you to place it before any key levels. Reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it won't be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. So that's also one of the reasons why people complain that the market is being manipulated because they missed the take profit by 1 pip. Okay. Yep. So in this example here, we are going in for a buy entry. So obviously we would place our take profit above and your stop loss below. So in this case, when you're going in for a buy entry, we'll place our take profit and stop loss below your key areas or your Fibonacci confluence areas. Okay, so for buy entry, place it below. For our sell entry, which is in this example, we'll place your take profit before take profit and stop loss before any resistance areas. So basically like above it, like this. Okay, so again, for buy entries, we'll place it below your key areas, and for sell entry, we'll place it above it. That's an easier way to remember. So yeah, this is the proper stop loss and take profit placement to ensure that you maximize your wins and minimize your losses. Okay, so some other trade management tips, especially if you are trading on your MT4, MT5, would be to use a trading journal. So here's some tips on how you can set it up. And it's relatively straightforward. So firstly would be to choose a format. So this can be, you can opt for a physical notebook, a spreadsheet, a digital document, or specialized trading journal software. So it all depends on your preferences and the level of detail that you wish to track. Number two is to decide on the categories. So this basically means to define the categories of information that you want to include. So it can be the date and time, trade symbol, entry and exit prices, position sizes, stop loss, take profit levels, trade duration, and trade outcome. You might also choose to include trade rationale, market conditions, and emotional state. Capture trade details, that basically means recording any relevant information and being consistent and diligent in entering the details accurately and promptly after each trade. Analyze trade performance. Basically, you are going to regularly review your trading journal to analyze your trade performance by looking for patterns, trends, and areas for improvement. Emotional factors. So this is quite important and quite often overlooked because it's important to take note of your emotional state during each trade. So how you would record it would probably be taking note of any emotional biases such as fear, greed, or overconfidence that may have influenced your decision making. So this information will help you to become more aware of your emotions and develop strategies to manage them more effectively. Review and adapt. So again, you want to learn from your past traits and experiences, identify areas for improvement, and refine your approach. And lastly, maintaining discipline, basically ensuring that you treat it as a crucial part of your trading routine and commit to using it consistently. Okay, some benefits of using a trading journal include performance analysis, which is basically allowing you to analyze your trading performance in a systematic and objective manner. And secondly, learning and development. This is pretty straightforward, but basically it's reflecting and learning on your decision-making process, identifying errors or missed opportunities that enables you to continually refine your trading strategy. Emotional awareness, we talked about this already. Risk management, we talked about this as well. But basically involves recording position size, stop loss levels, risk to reward ratios as well, so that you analyze how effective your risk management strategies are. And that's quite crucial as well. Trade planning and execution. So this basically involves providing a record of your trade setups, including the analysis and rationale behind them, and accountability and discipline, pretty straightforward, and confidence building. So a trading journal can help you to boost your confidence by documenting your successes and your learnings, and you can review your progress regularly and build confidence. Additionally, having a record of successful trades can serve as a reminder during challenging times, reinforcing your belief in your trading strategy. Okay, that's it for my slides. We still have some time left, so let me just pull out our charts and we can take a look at maybe one or two charts together. So if you have any requests for any charts that you want me to go through, just pop them into the chat. Okay. Are there any specific charts that you guys want me to go through? Okay, I see we have requests for AUD. So let's take a look at that. Okay, so I like to start off on our weekly time frame so that we get an idea of where prices are headed towards. Now, on our Aussie dollar, you see prices moving in this descending trend line. And you can kind of see price approaching the trend line again. Now, on our daily time frame, prices are kind of fluctuating a bit more, moving sideways. Now, on our 4-hour time frame, it's also kind of, it actually looks like prices are moving upwards here. Okay, let's see if we have any trend channels or trend lines here. Okay, we actually have prices moving in this ascending trend channel. Okay, so I'm just gonna go ahead and analyze this on our 4-hour time frame. So I'm gonna place my pivot over here. And you can see it's a good habit to try and pull back your level as far as you can so that you can see how significant that level is. Okay, so you can see here I have a couple of swing highs that have tested this level in the past. Okay, this is my pivot. And my first support, or rather my first resistance, maybe up here. and my first support over here. Okay. Okay, now I'm going in with this Nike tick shape here, which we call Fibonacci extension, and 161.8 lines up nicely with our pivot. Okay, now I'm going in with a retracement. Okay, and you can see my 50% lines up with my pivot. Again, going in with my projections. Okay, my 61.8 lines up with my pivot as well. So you can see this area here where my pivot is at is a pretty strong confluence area. Okay, because we have 3 levels lining up. Okay, I think that's all the levels that we have. Okay, I'm gonna move my first resistance down. Maybe over here. Okay, and I'm gonna go in. So we are expecting price to continue in this ascending trend channel. Okay, but we are aware of this confluence area here as well, which might have a bit of resistance. Now let's look at our indicators. We have our Ichimoku and MACD. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it supports our analysis. Now if we look at stochastic, okay, stochastic isn't telling us much. If we look at RSI, okay, on our RSI, we see prices moving. We see prices moving in this ascending trend line. Okay. So yeah, pretty bullish signals here, just highlighting this confluence area with multiple swing highs and one swing low, as well as 3 Fibonacci levels forming a confluence area. Okay, any other requests? Okay, any other requests from you guys? Okay, if not, I think that's all the time we have for today. Thank you guys so much for joining me. If you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.